Hello traders, this is Fawad Razak, market analyst for City Index. Today is the 26th of June. So following the big rallies we've seen in gold and silver, platinum has been obviously on the rise as well in the last month or so. But now other metals are joining the rally. For example, palladium is breaking out today. But more to the point, copper has finally taken out the $5 level, as you can see here, which is a bullish sign for the global economy. With copper breaking out, this is positive news for the likes of the Aussie dollar and the Chinese yuan. But looking at the copper price itself after a consolidation here, today's breakout is significant. It could potentially pave the way for a run to the all-time highs we saw earlier this year at 539. That's now going to be the next key level to watch should we get there. But following today's breakout, dips could be bought. So watch out for more gains in the days ahead. Unsurprisingly, the Aussie dollar has continued to rise today, rising for the fourth consecutive time, tracking the firmer metal prices. The Aussie dollar could potentially rise a lot further than this because of the fact it has been consolidating for a long time and now it's trying to break out. Now remember, the Aussie hasn't made gains like the euro dollar, for example, or the pound, both testing multi-year highs, but the Aussie has been held back in recent years because of concerns about China and whatnot. But now with those concerns easing a little bit, could we see the Aussie dollar rise more meaningfully from here? Well, that's a key question, and I think given the bullish price structure here, I reckon a breakout above 66 is on the cards, and if we get there, why not rise even more? So price action is certainly bullish on the Aussie dollar, and a couple of levels to watch include this level right here, marking the hammerhead at 64.64. Above that, we have this level here at 65.15, marking yesterday's high. So those are the kind of levels I'd be expecting to hold now if we see a dip back into this congestion zone. But obviously, if we go back below these levels, then that could potentially put the bulls in a spot of bother. But the bearish scenario is out of the question at the moment because we're making higher highs and higher lows. But if in the coming days or weeks we go below the low that was created on Monday at 63.72, at that point the bullish bias would turn negative once again. We'll cross that bridge if and when we get there. For now, the path of least resistance is to the upside. Now in the equity space, the Nasdaq 100 has hit a new record high today after taking out the February's old high. And soon we could potentially see the S&P 500 follow suit because the index is quite close to its own corresponding record high that was hit in February. The price action, as you can see, remains quite bullish with the index making higher highs and higher lows. And following the ceasefire agreement between Iran and Israel, we've seen renewed bullish momentum come into the market. So is that enough to keep us supported and potentially break to new highs? Well, that's the key question. But what we can do as traders is monitor our support levels closely. And for as long as they continue to hold, the path of these resistance will remain to the upside. So a couple of levels I've highlighted on chart include this one right here at 6,069, marking the mid-June high, which has now been taken out. That level could turn into support on a potential retest from above. Below it is Monday's high at 60.29. Ideally, you wouldn't want the index to now go back below Monday's high, but there are a few other levels that could potentially provide support in the event we see a deeper retracement. But the line in the sand for me now is Monday's low, because that's the last low made prior to the index breaking to a new high. So if that were to give way in the coming days or weeks, then at that point we could potentially see some heightened volatility, as we could see some liquidation of long positions. But we'll cross that bridge if and when we get there. For now, the path of least resistance is to the upside. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.